It's a bit of a broken record at the moment. Daily stories about market volatility because of concerns about Europe. Occasionally a new country is named as suspect. This week it was France, and the whole vicious circle turns another revolution. The consensus reaction is to sell everything that's not nailed down. But are things really that bad? I spoke to a global investor with a clear view, Magellan Financial Group's Hamish Douglas. Well, Hamish, it looks pretty bad. What should we do? Should we run away and hide in cash, or should we hold our breath and jump in?
Well, Alan, to be honest with you, we're pretty relaxed about what's going on at the moment. That may surprise you. You know, the epicentre of the uncertainty is really a judgment call. Is Europe really going to collapse? Is it going to have a financial Armageddon event? And we think the risk of that is very low at the moment.
Well, why is that? I mean, why don't you think there'll be a default?
It's our judgment that the Germans are actually fully in control of this situation at the moment. The markets don't like it. They would like an instant solution, and there are some instant solutions that are being pushed by the French and actually by the UK, being pushed by the Americans to try and put an end to this uncertainty. But I don't think the Germans want an end to the uncertainty at the moment. They don't want to pull the triggers to take the pressure off countries like Greece and Italy and Spain and even France for forcing through measures that are going to put Europe on a more stable footing for the long term. Germany, I believe, knows when it comes to the crunch, there are options if it really blew up into a full-scale catastrophe. And, you know, many people have put these options on the table. I think Merkel has been very careful in the words while they're ruling them out. She is ruling them out for the time being, such as the ECB intervening in markets in an unlimited way to put a cap on bond rates. The Germans don't like it, but she's used language for the time being. But the Germans must be pretty pleased with the political change in Italy. They must be pretty pleased with the austerity programs being forced through in France, and I think they must be pleased with what's going on in Greece, because if Europe is going to be stable in the long term, they need to change the policies and the fiscal policies within the centre of the Union.
Well, I suppose fundamentally, if countries are uncompetitive, as Italy and Greece are, then they either have to devalue their currency or reduce their wages and their standard of living. And they can't devalue because they're in the euro, so they have to cut wages, which is why I guess they've had to suspend democracy and appoint their new prime ministers.
Yeah, there is no doubt, in order to get this on a stable footing in the long term, some very drastic action and painful action has to be taken. And I think you're really seeing here the rise of Germany. We've talked about the rise of China, maybe the demise of the United States, but still the superpower. We are seeing the rise of Germany, who is dictating policy in Europe. And I have no hesitation in saying Germany is not going to let the European Union fall over. They're not going to let a spectacular collapse, but they are forcing through economic policy that they believe. It's not an easy task, but I'm very impressed with how Merkel is handling the situation. I think it's very painful for the Europeans. It's incredibly frustrating for financial markets who would love a more definitive solution to end the bond crisis in countries like Spain and Italy. I think the Germans believe they have time on their side, and by allowing bond yields to go up is putting so much pressure for change to happen politically and economically within other large companies in Europe, and Germany have realised this is fundamentally in their interest. So unfortunately for markets, we're going to have continued uncertainty. But going back to your early question, we think this is a great opportunity. We don't think you're going to get financial Armageddon. We don't think we're going to get a quick resolution to the situation. And times of uncertainty for people who are longer-term investors, if you don't believe the world's about to end because of this, it's actually an interesting time to be investing.
I suppose it's a rise of the surplus countries, Germany and China.
It absolutely is, and people probably don't realise that Germany at the moment is running the largest trade surplus in the world. It is running a larger trade surplus than China is at the moment. They are tied to a currency that fundamentally undervalues their competitive advantage in terms of exporting, and Germany wants to maintain that advantage as China wants to maintain their advantage. And that's why I said this is the rise of Germany, and because of this crisis, more power is being centred in Europe, in Germany. And whilst we have others lecturing the Germans, I think the Germans think they are fundamentally in control of the situation, and that's why I said you are seeing the rise of Germany, and I just don't think people can see it at the moment, what's actually happening.
Of course, the other big deficit country is the United States, and they're into a new phase of their debt problems now with the Super Committee of Congress trying to deal with the deficit. Do you think they've got another crisis left in them?
I don't think they're going to resolve the long-term fiscal position of the United States prior to the next presidential election. In the long term, I think the fiscal crisis is well overblown. A lot of the fiscal crisis can be addressed, and a lot of the possible solutions are being put on the table. There's an ideological battleground being developed, and I don't think either side really wants to take that ideological battleground off the table prior to November next year, leading into a presidential election period.
Yes, but do you think there'll be another crisis, another blow-up in the US that'll create an even greater buying opportunity than you think we're seeing now?
Well, that could well happen, Alan. We don't think a blow-up in terms of you're going to see a financial Armageddon event in markets. I don't think anyone on sides of politics in the US would seriously stop paying the bills, but could the markets become very disillusioned with what comes out of the Super Committee? There's probably a reasonably high probability that the markets will be disillusioned of what they hear.
And what's your view of the future of the other surplus country, China, and therefore Australia?
China is now dealing with the issues of their stimulus programs in 2009 and 2010, and I think that is a natural consequence of that. Will China be able to cope with invoking policies to deal with those issues? We absolutely believe they can. Is China a house of cards, as some people are saying? China is not a house of cards. The risk to China would be if Europe really had a spectacular collapse. If Europe had a spectacular collapse, I think it's highly likely China would have a very hard landing. But given we don't think Europe is going to have a spectacular collapse, Europe's got a very tough decade ahead of themselves. You know, they're facing up to some very, very ingrained structural problems in Europe. But China is going to have a relatively soft landing in our view, and I think that's reasonably good news for the Australian economy in the next period ahead.
Thanks, Hamish.
Thanks, Alan.